Selling an investment property is a big decision. You've built equity, collected rent, and maybe even made improvements. Now, you're wondering if it's time to cash out or reinvest. The biggest question is how to keep more of your profits. A traditional sale gives you immediate access to cash, but you'll pay capital gains taxes. A 1031 exchange defers those taxes, letting you roll your profits into another investment. Which option is better depends on your long-term goals. Selling outright is the simplest option. You list the property, find a buyer, and walk away with your profit. The downside is taxes. Depending on how long you've owned the property and your tax bracket, capital gains taxes can take a big chunk out of your earnings. If you're in a high appreciation market, your gains might be substantial, meaning a larger tax bill. Some investors are willing to pay it for the flexibility of using their money however they want. Maybe you're ready to retire, invest in a different asset, or pay off debt. If you need liquidity, a traditional sale makes sense. A 1031 exchange allows you to defer taxes by reinvesting in another property. Instead of paying the IRS, you keep your profits working for you. This strategy is powerful for building long-term wealth. By rolling over your gains into a new property, you can scale your portfolio without losing money to taxes. The process has strict rules. You must identify a replacement property within 45 days of selling and close on it within 180 days. The new property must be of equal or greater value, and you can't take possession of the funds in between. A qualified intermediary must handle the transaction to keep it compliant. A 1031 exchange works best if you plan to stay in real estate. If you want to upgrade to a larger property, move into a better cash-flowing market, or diversify your portfolio, this strategy keeps your capital intact. Instead of losing 20% or more to taxes, you reinvest everything and keep growing. Many investors use 1031 exchanges repeatedly, trading up to better properties over time while deferring taxes indefinitely. If you hold the property until you pass it on, your heirs receive a step-up in basis, potentially eliminating capital gains taxes altogether. There are downsides. A 1031 exchange ties your money to real estate, limiting your ability to diversify. You also need to find a replacement property quickly, which can be a challenge in a competitive market. If prices are high and inventory is low, you might struggle to find a deal that makes sense. Rushing into a bad investment just to defer taxes is a mistake. Always make sure the numbers work before committing. Selling might be the better option if the market is peaking, the property requires major repairs, or managing rentals no longer fits your lifestyle. Some investors sell because they're tired of dealing with tenants and maintenance. Others cash out to reinvest in stocks, businesses, or other ventures. If you don't want to stay in real estate, paying the taxes and moving on might be worth it. The key is understanding your goals. If you need access to capital now, a sale is straightforward. If you're focused on long-term portfolio growth, a 1031 exchange is a better fit. At Alpine Property Management, Kansas City, we help investors decide which strategy makes the most sense. If you want to keep your rental but avoid the headaches of managing it, we handle tenant screening, maintenance, and financial tracking to maximize cash flow. If you're looking for your next investment, we can help you find properties that meet your financial goals. Our expertise in the Kansas City market ensures that your investments continue working for you. For those ready to exit a property, we buy houses in any condition. If your property isn't performing well, needs too much work, or no longer fits your strategy, we offer a fast, hassle-free way to sell. No listings, no waiting, just a fair offer and a quick closing. Instead of dealing with repairs and showings, you can move on with your investment goals. Choosing between selling and a 1031 exchange comes down to where you see yourself in the next few years. If you need liquidity, selling is the fastest way to cash out. If you want to keep growing your real estate portfolio, a 1031 exchange lets you reinvest without losing money to taxes. Both options have advantages. It's just a matter of what fits your situation. Thanks for watching. If you found this helpful, please like, share, and subscribe for more real estate investing insights. Whether you're looking to sell, reinvest, or simply manage your properties more efficiently, Alpine Property Management, Kansas City is here to help. Making the right choice now can have a big impact on your financial future. Let's make sure your real estate profits work for you, not against you.